You want to make the most of your tax return this year? Let me give you some ideas. Number one, if you do not already have an emergency fund, that's going to be your first priority. You want to at least save $1,000 to $2,000 if you don't have anything saved yet, or if you're working on a fully funded emergency fund, that would be 3 to 6 months worth of your expenses or your income, whichever makes you more comfortable. Keep this in a high yield savings account, and if you need more information about this, I have a recent video about emergency funds, so go check that out. It's really, really important to have that safety net for yourself in case unexpected expenses come up. So it's very important, and like I said, if you have nothing saved so far, this is where you want to start. Number two, if you have at least $1,000 to $2,000 already saved up for your emergency fund, use your tax return to start paying down your debt. Create a snowball or an avalanche plan for yourself. If you don't know what that is, again, go check out my page. I do have videos about it, but essentially you'll just list all your debts in order and start paying them down in the order you want. The snowball is going from smallest to largest balance. The avalanche is going from largest to smallest interest rate. Depending on how much your tax return is, you might be able to make a whole lot of progress on your debt payoff plan. So make that for yourself and see where you stand. Another good idea is to put some money aside for retirement. Go open a Roth IRA if you qualify for it. If you don't know if you qualify, go look on my page for the Roth IRA video, and I show you all the income limits and how much you need to make to qualify. A Roth IRA is a tax-advantaged retirement account, meaning that when you pull that money out later, you are not going to have to pay taxes on it. You can invest up to $7,000 this year, so go ahead and get started on that. Another option is to get a month ahead on your bills. What this means is that you would take your total fixed expense number or all of your bills that have due dates and set that money aside in an account just for bills. This would be a checking account, like I said, just for bills. This will allow you to automate your finances by putting everything on auto pay from that account, and you will stay ahead because every time you're paid, you'll replenish that account with a fixed amount. I do have videos about that full process as well, or you can go check out the Money Mastery Toolkit at the top of my page. Another idea is to invest in your education, invest in yourself. If you don't normally have the money to buy things like online courses and guides, this is a good time to do it. Invest in things that are going to bring you closer to your goals. So for instance, if you wanted to learn about getting your money together, you could invest in my course or one of my guides. If you wanted to learn how to do e-commerce or digital marketing, there are people who sell those courses as well. So these are just some ideas for you to get started and know what to do with your tax return. It's really important that you actually plan that money before you get it. That way you don't get it and just go blow it. So tell me in the comments, what are you going to do with your tax return? Where do you fall? Are you going to start your emergency fund? Are you going to open that high yield savings account? Are you going to start paying down your debt? I'm curious. Let me know. Make a plan, execute that plan. You got this, friend.